Hey everybody, this is Corey Harrington, founder of Creative Real Estate Made Easy. I'm answering some questions from, this is Yahoo questions about real estate investing. And this particular question is, how much should we offer on this house? This is a question on how much they should offer on a property. And the question reads, my fiance and I found a house that is being sold by a relocation company for $95,700. It has been on the market for 109 days now. It was listed for $105,900, then dropped 9.6%. What would you offer? By the way, it's a house in Arlington, Texas, home of the new Cowboy Stadium, if that helps. Okay, so to answer this question is basically, if you're going to make an offer on a property, you want to factor in some things that you want to take into consideration when you're buying your property as a residential property versus an investment property. So my company, we teach how to invest in residential real estate and other real estate assets, commercial real estate, mini storage and such. But what we the question we're asked here is if they're going to be a person that's going to actually live in the property. So if the property is going to be an owner-occupant property, it's for you. First off, treat that as an expense. It is not income. It is not profit. It is an expense. So the bottom line is, can you support how much expense it's going to be when you purchase the property? Is this something that's going to work out for you? It's going to be worthwhile. So if you're going to buy a property for, let's say, $100,000 in this example, or $95,700, and you're required to put a down payment down of 10%. There's programs out there. You can get the $8,000 tax credit if it's still in existence. If you're listening to this video beyond February or March of 2010, then it's not relevant. But this was filmed in March of 2010. But there are programs out there that you can pay less down payment through an assistance program, either a tax credit or an FHA program where you're required to pay 3% down. You can get into a VA program. There's various different deals out there, but the bottom line is, let's say you have to do a traditional 10% down payment. Now you buy this place for $97,000. You're required to spend theoretically $9,700 in a down payment, plus you have closing costs and all these other considerations. So really, you might be out of pocket about $15,000 to $19,000 on this property, based on just some rough numbers I ran in my head. So you're making a loan out for 90% of the value. Now in today's market, at 5% interest rates, principal, interest, tax, and insurance, plus incidentals, you might be paying about $1,000 plus a month for this property. If you make $3,000 a month, and you're paying 1/3 of that towards your living, I think that makes perfect sense. If you're making less than that, you might want to consider buying a cheaper property, but it's certainly better than renting. If you're renting and you're spending $1,000 plus on rent, it's going straight into the landlord's pocket, which, I own properties and I definitely appreciate my tenants paying me. But ultimately, I profit every time they send me a check. I'm getting a little bit of cash flow every single month, plus they're paying off my mortgage on the property. So through time, my tenants are paying for my property, and I'm profiting all the way, just for putting the deal together and being the owner. So it's a great advantage to be in a real estate investor and landlord and keeping these properties long term. So if you're going to rent a property, you're on the other side of the spectrum. There's an investor receiving the benefit of you living there. So regardless, even though this is an expense and you're going to be moving into and creating an additional expense for you, if you could financially handle it, I would suggest doing it and doing it immediately. So paying full price for this property based on the market value is appropriate if this is going to be your residence. Now, it's always nice to have a discount, but don't treat this as a future investment property, even though it certainly can be. You want to make sure that you're making the right decision. So don't walk away from the property and continue to rent because of a few $1,000s. go ahead and make that move and buy the property and move in. So, but to answer the question more specifically, I would have to know what the repairs are. If there are any repairs, I'd factor that into my purchase price. I want to know what they're basing their value on with comparables. It looks like it dropped 9.6% as they state from where it was originally listed. I'd want to know why it was dropped. 109 days on the market is not unusual. It's very likely that they may have had an offer and it fell out, or but sitting on market for 109 days right now is not unusual. So they're hoping to move it faster because it's been on there for about a quarter of the year. But it looks like they're not dropping it too far. A 9.6% drop might have been just a correction to state that the property is really only worth $95,000. So in this case, they were overpricing it. Let's just say, for instance, because I simply don't have enough information to go off of. I don't know the address of the property. I don't have comparables to look at. Those are the things that you want to go through to determine what your value is. So recapping this thing, if you're going to buy a property as a residence and you're moving in, it is an expense. It's not an investment at this point in time. Paying full retail is okay as long as it's in line with the value of your, or if it's in line with your ability to spend. I would not spend more than 1/3 of my income towards my primary residence. If this is an investment property, you need to look at it completely different. And I'm not going to go through that in this video. But I hope this helped. To the person asking the question, if the property is worth $95,000 and you're happy with it and you're currently renting something and you can afford it, go ahead and make that purchase even though it's full retail. You're living in there, and long term, you're going to pay it off in 30 years. So as a long term value play, it's the best thing you can do, especially over renting. So this is Corey Harrington, founder of Creative Real Estate Made Easy. Pardon the hat and the sweater, but I was working out earlier and I saw this and I figured I'd put out a video on it. So again, Corey Harrington, founder of Creative Real Estate Made Easy. You can contact my office at 210-682-8937 or 210-68-BUYER. I am a real estate investor in San Antonio, Texas, and I teach people how to invest in real estate. I own a franchise of a real estate investing company, and I've purchased 400 plus properties since 2003. So I have a tremendous amount of experience. Please contact me and let me know how I can help you. Thanks.